Hi, welcome back here with Mid-Cap Radar. The stock on our radar now is Skipper. The stock is buzzing after the brokerage Emkay Global has initiated coverage with a buy rating. Amongst the triggers that Emkay has listed out, they say that they expect the next phase of growth to be driven by the polymer pipe segment, and they expect a top-line growth of 19% over FY 17 to 20, and the bottom line to keep pace at 22% CAGR during this period. We're now joined by Sharan Bansal, the director of the company, for more details on what their plans are looking like going ahead. Sharan, good afternoon. Thanks much for joining in. So I want to actually start off by talking about one of the triggers which Emkay has listed, which is the polymer pipes business. So if I understand it correctly, as of now it's contributing just about 10% to your business. What's the plan going ahead? How are you looking to scale this up? And what's the internal target about how much it could eventually contribute, say, by FY 20?
Hi. As you know, polymer pipes is certainly one of our high growth divisions. And we've been consistently investing a lot in new capacities as well as new geographies in this business. Our latest plant in Guwahati has been commissioned in March of this year. Then that plant is focused on capacity for fittings alone. So that is also boosting our overall capacity ramp up. It's helping us utilize our capacities better. Currently, in terms of growth, our internal targets are, of course, much higher than what the brokerages have been guiding. We are expecting, even this year with some GST difficulty, we are expecting to grow comfortably at 25 to 30% in that range. Overall, whether as to what percentage of revenue this business will have in the company in FY 20, you can expect that from a 10% currently, it should grow to about at least 15%, maybe somewhere in the range of 17% by FY 20.
So this 25-30% guidance that you're giving, this is for your overall revenue growth, right?
No, this is for the polymer pipes.
For the polymer pipes, okay. What about, for the consolidated business as a whole? Because this time around, maybe because of GST or, such one-off factor that in Q1, your margins were a tad bit lower. So what's the headroom that you have, therefore, in FY 18? Are the GST transition pain, is it done or is there some more pain left?
The GST transitional pain was mostly felt in our polymer pipes business only. There wasn't any much GST challenges in our main business, which is engineering products. Polymer pipes, of course, Q1 we hardly grew, by barely about 2%. Quarter 2, again, we don't expect much from that. However, we are seeing a good growth rebound starting in the beginning of quarter 3. So certainly, we can, as I mentioned, our overall year guidance is maintained at 25-30% growth for the polymer pipes business. In terms of consolidated growth guidance, you can expect somewhere between 15 to 20% for the company.
Okay. This you said, so by third quarter you have some visibility in terms of pickup, right? Second quarter is not going to be that much. But is that because you have some projects that you have to supply to at hand? Because right now it's all mostly retail for you in terms of the PVC business.
Yes, so I'm talking about, and our business in PVC continues to be largely led by retail. Project sales are very a small percentage for us. It's the retail sales I'm talking about that we see a good pickup in the beginning of quarter 3.
In Q1, the capacity which you have was utilized to the extent of some 50%, right? For the segment.
Q1 would not be 50%, it was probably lower. Overall, in the year, by the end of the year, we do expect capacity utilization to go up to 60-65%.
Okay, and by when do you expect, it's a function of the economy and growth and underlying the sector, etc. as well. But do you expect to get to full capacity utilization? This year, next year?
Well, we are adding capacities as well, because right now we're at about 51,000. The medium-term target is to take the capacity up to 100,000 tons. So we will be consistently adding capacities in this business. I would not be able to give you a clear picture when we can expect to get full capacity.
I think that 1 lakh target was by FY19, but given that you were at about 60-65%.
Correct. So yeah, we probably see that coming in FY20. But I believe it's a slow and steady growth. We've had some hiccups along the way because of demonetization and GST, but it is still growing steadily.
Margins in the segment are also, a lot lower compared to other players in the industry, right? Could you talk about that?
Yeah, sure. So there is, of course, being a newer player in the industry, we are at a lower margin compared to the industry leaders, which gives us optimism that there is a lot of headroom to grow there. We are at about 10% margins here, whereas industry average is in the 14% plus range. So certainly as the gap in pricing reduces between us and the market leaders, we can certainly expect to see better and better margins in this business. Also, our fittings capacity, which I spoke about earlier in Guwahati, fittings being a high margin business, that will certainly add to margins also in the years to come.
Okay. What's your current overall order book?
The order book is in the engineering product business, not in the polymer pipes business.
Right.
Engineering products, we have an order book of 2650 crores as of beginning of this year. And order inflows are quite healthy. We are seeing a lot of projects in particularly intra-state networks, as Jharkhand has recently come out with a new scheme of about 10,000 crores of investment in intra-state. This is a pretty large investment announcement by any state till now. They've already come out with the first set of tenders in October. Also, Power Grid has recently won a large project in ERSS 21 on a build, own, operate basis. So that project was also awarded to them in October itself. So I see a good traction happening in the eastern region and northeastern region states.
All right, Sharan, thanks very much for sharing quite a bit of information with us and for your guidance, and we'll touch base with you post your Q2 numbers. That's the word coming in from Skipper. The management themselves quite hopeful actually of a pickup in the polymer business, expected to grow at about 25-30% and the overall growth guidance stands at 15 to 20%. A quick break. When we come back, more stock specific action lined up, so do stay with us.